What is insurance? Insurance is a contract, represented by a policy, in which an individual or entity receives financial protection or reimbursement against losses from an insurance company. The company pools clients' risks to make payments more affordable for the insured. Insurance policies are used to hedge against the risk of financial losses, both big and small, that may result from damage to the insured or her property, or from liability for damage or injury caused to a third party. How insurance works? There is a multitude of different types of insurance policies available, and virtually any individual or business can find an insurance company willing to insure them for a price. The most common types of personal insurance policies are auto, health, homeowners, and life. Most individuals in the United States have at least one of these types of insurance, and car insurance is required by law. Key takeaways. Insurance is a contract, policy, in which an insurer indemnifies another against losses from specific contingencies or perils. 1. There are many types of insurance policies. Life, health, homeowners, and auto are the most common forms of insurance. 2. The core components that make up most insurance policies are the deductible, policy limit, and premium. Businesses require special types of insurance policies that insure against specific types of risks faced by a particular business. For example, a fast food restaurant needs a policy that covers damage or injury that occurs as a result of cooking with a deep fryer. An auto dealer is not subject to this type of risk but does require coverage for damage or injury that could occur during test drives. There are also insurance policies available for very specific needs, such as kidnap and ransom, CAN, medical malpractice, and professional liability insurance, also known as errors and omissions insurance. Insurance policy components. When choosing a policy, it is important to understand how insurance works. A firm understanding of these concepts goes a long way in helping you choose the policy that best suits your needs. For instance, whole life insurance may or may not be the right type of life insurance for you. There are 3 components of any type of insurance: premium, policy limit, and deductible, that are crucial. Premium. A policy's premium is its price, typically expressed as a monthly cost. The premium is determined by the insurer based on your or your business's risk profile, which may include creditworthiness. For example, if you own several expensive automobiles and have a history of reckless driving, you will likely pay more for an auto policy than someone with a single mid-range sedan and a perfect driving record. However, different insurers may charge different premiums for similar policies, so finding the price that is right for you requires some legwork. 3. Policy limit. The policy limit is the maximum amount an insurer will pay under a policy for a covered loss. Maximums may be set per period, e.g., annual or policy term, per loss or injury, or over the life of the policy, also known as the lifetime maximum. Typically, higher limits carry higher premiums. For a general life insurance policy, the maximum amount the insurer will pay is referred to as the face value, which is the amount paid to a beneficiary upon the death of the insured. Deductible. The deductible is a specific amount the policyholder must pay out of pocket before the insurer pays a claim. Deductibles serve as deterrents to large volumes of small and insignificant claims. Deductibles can apply per policy or per claim depending on the insurer and the type of policy. Policies with very high deductibles are typically less expensive because the higher out-of-pocket expense generally results in fewer small claims. Special considerations. With regard to health insurance, people who have chronic health issues or need regular medical attention should look for policies with lower deductibles. Though the annual premium is higher than a comparable policy with a higher deductible, less expensive access to medical care throughout the year may be worth the trade-off. Sponsored. Simple, friendly, safe. Check the stock investing app. Join eToro's investing community of 25 million users worldwide and invest in global and local stocks, in bulk or just a fraction. Enjoy zero commission stocks and powerful, yet friendly, trading tools. Your capital is at risk. Other fees apply. What is group term life insurance? Group term life insurance is a type of term insurance in which one contract is issued to cover multiple people. The most common group is a company, where the contract is issued to the employer who then offers coverage as a benefit to employees. Many employers provide, at no cost, a base amount of group coverage as well as the ability to purchase supplemental coverage and coverage for employees' spouses and children. Group term life insurance is relatively inexpensive compared to individual life insurance. As a result, participation is high. Key takeaways. Many employers offer basic group term life insurance at no cost to employees as part of a benefits package. It is possible, and it may be prudent, to have group term life insurance and an individual life insurance policy at the same time. When you leave a job, you may be able to convert a group term life insurance policy to an individual life insurance policy. However, for many this option is cost prohibitive. How group term life insurance works. About 80% of companies offer company-paid group life insurance as a benefit, reports the Society for Human Resource Management. One group life insurance policies are generally written as term insurance and offered to employees who meet eligibility requirements, such as being a permanent employee or 30 days after hire. Group term life insurance coverage can be adjusted for qualifying life events or during an open enrollment period. The standard amount of coverage is usually equivalent to the covered employee's annual salary. Employers typically pay most or all of the premiums for basic coverage. Additional amounts, ordinarily in multiples of the employee's annual salary, are usually offered for an extra premium paid by the employee. Advantages and disadvantages of group term life insurance. Group term coverage is generally inexpensive, especially for younger people, and participants may not be required to go through underwriting as all eligible employees are automatically covered. However, unlike individual term insurance plans, which typically lock in a rate for 20 to 30 years, most group plans have rate bands in which the cost of insurance automatically goes up in increments. For example, at ages 30, 35, 40, etc., the premiums for each rate band are outlined in the plan document. While inexpensive, in many cases, the amount of coverage offered by group life insurance may not be enough and should be combined with an individual plan. Employers or association groups offering the insurance often limit the total coverage available to employees or members based on things like tenure, base salary, number of dependents, and employment statuses such as full-time, associate, or executive, with the amount of available coverage varying by the group. Most commonly, employers offer multiples of an employee's salary or fixed amounts, such as $20,000 or $50,000. Many group plans only cover an individual's base salary. Other forms of compensation may be excluded, such as bonuses, commission, reimbursement, or incentives that are reported as income. For example, an auto reimbursement or restricted stock award. Another reason group insurance should be considered supplemental is that it's contingent upon employment. Coverage automatically ends when an individual's employment terminates, and at that point, it may be harder or more expensive to get individual insurance. Some insurers do offer the option to continue the coverage by converting the group term to an individual permanent policy. The conversion options vary, may not be automatic, and could require underwriting. Consequently, an individual could be rated and offered a policy with a much higher premium. Also, the policies available when converting may be limited and are not always the most competitive products. Some group life insurance plans may only cover accidental death and dismemberment. These Adant policies primarily cover deaths or severe injuries resulting from an accident, so not a disease or natural causes, and come with significant coverage limitations. Always read the fine print to be sure you understand your group coverage and benefits. Requirements for group term life insurance. Typically, all employees are automatically enrolled in the base coverage once they meet the eligibility requirements. Requirements vary and can include working a certain number of hours per week or a certain amount of time as an employee. The availability of supplemental group term coverage differs. In some plans, enrollment is only available when an individual is initially employed or upon a qualifying life event, such as the birth of a child. In other plans, supplemental group term coverage can be added during open enrollment periods. Supplemental coverage may require underwriting. Usually, it is a simplified underwriting process whereby the insurance seeker answers some questions to determine eligibility rather than having to go through a physical exam. The carrier then decides whether or not it will offer the additional coverage. Special considerations. Employers are allowed to provide employees with $50,000 of tax-free group term life insurance coverage as a benefit. Any amount of coverage above $50,000 that is paid for by an employer must be recognized as a taxable benefit and included on the employee's W-2. If an employer does differentiate, which is allowed, by offering different amounts of coverage to select groups of employees, the first $50,000 of coverage may become a taxable benefit to certain employees such as corporate officers, highly compensated individuals, or owners with a 5% or greater stake in the business. Even if a term policy is right for your current circumstances, it's worth comparing your employer's offering with the plans of other firms to ensure you'll be receiving the best term life insurance policy possible. It is also important to revisit the coverage you have selected during open enrollment to make sure the plan still fits your needs.